Welcome to MES e-learning channel. In this lecture, I will be talking about conversion or sale of partnership firm into a limited company. So these are some of the topics I will be covering in this lecture today. The first topic is dissolution of partnership firms, then formation of a company, then purchase consideration and the calculation of purchase consideration, then distribution to partners. So these are the five reasons behind the conversion or sale of partnership firm into a limited company. The first reason is the liability of the shareholders are limited. The second reason is the shares are easily transferable. The third reason is there is no limit on the maximum number of shareholders. The fourth reason is a limited company can raise large amount of capital from the public. And the final reason over here is they can carry on the business at a large scale. Now, we need to know what's the meaning of purchase consideration and how to calculate purchase consideration here. Here, purchase consideration is nothing but it's the price paid by the company to take over the assets and liabilities of the partnership firm. So, there are some methods for calculation of purchase consideration here. The first method is lump sum method. Here, the total amount will be given in the agreement itself of purchase consideration. The second method is net asset method. Here, there is a formula that has to be applied in order to calculate purchase consideration. The formula is assets taken over at revised values minus liabilities taken over at revised values. Now, the third method is net payment method. Here, net payment method, here it is made by the company to the partners in the form of debentures, shares and cash. So these are the three methods in order to calculate purchase consideration. Now distribution of purchase consideration to partners. So here there are some approaches that has to be made in order to calculate or in order to divide the amount of purchase consideration between the partners. The first approach over here is specific ratio. In the specific ratio, the amount of purchase consideration will be divided in the agreed ratio itself, which will be given in the agreement. Now, the second approach is equitable approach. Here, the equity shares should be among the partners in their profit sharing ratio. In PSR ratio, the amount of purchase consideration will be divided among the partners. Now, the final approach in order to divide the amount of purchase consideration is legal approach. So, here as per section 48 of Indian Partnership Act 1932, the shares and debentures can be divided in the ratio of their capital. Now, the accounting process. So, there are two approaches under this accounting process. The first one is accounting in the books of partnership firm and accounting in the books of the company. In both the accounts, you need to mention the various steps which will be applicable under the partnership firm as well as in the company. So, accounting in the books of partnership firm. So, these are the accounts that has to be prepared under partnership firm. The first point is realization account, then partnership capital account, company account, then equity shares of preference shares or debentures of the company account. Now, these are the steps or the journal entries in the books of partnership firms. So, the first step is you need to transfer assets to realization account at book values. Then the second step is you need to transfer outside liabilities to realization account at book values. The third step is you need to transfer accumulated reserves to partners capital account in PSR. If you check the approaches that we have already discussed before, you will get to know what is PSR here, that is profit sharing ratio. Now, the fourth step is you need to transfer accumulated losses to partners capital account. Then the fifth step, you need to transfer or you need to, assets are not taken over by the company is sold. You need to pass journal entry for this adjustment. So, as per the adjustments, as per the changes that has been took place, you need to pass these all journal entries which are given. Now, the next step is step number 6, that is assets are taken over by partners. Then liabilities taken over by the company is paid. Then liabilities taken over by partners. Then expenses paid. Then company's purchase consideration due, then purchase consideration received. As per this, all the adjustments as per the adjustments which are given while conversion of partnership firm into a limited company, as per the adjustments you need to pass all the journal entries. Now the next step, that is step number 12 and 13. In this, you need to close realization and you need to find out whether the realization is in profit or loss. Then after that, the 14th step is distribution of shares, debentures, etc. received from company to partners. And the final step is the balance in the partner's capital account will be settled. That is, you need to close partner's capital account and you need to find out the balance amount, and here the balance amount will be transferred to cash or bank account. Now these are the ledger accounts as per the steps that we have discussed before, as per the 15 steps. Then the final topic is, that is accounting in the books of the company. Under this, we are having 3 steps that has to be followed in the books of the company. The first step is assets and liabilities over revised values. Then the second step is payment of purchase consideration. And the final step is dissolution expenses paid by the company. So I have discussed all the topics, all the summarized way of the topics that will come under conversion or sale of partnership firm into a limited company. Hope you all understood the topic and even the points that I have discussed.